Well, thanks for staying with us. This is Business Nigeria. Let's get into the conversation now, shall we? Since 2015, the Nigerian economy has been grappling to survive contending macroeconomic issues, which has continued to affect both Nigerians and their businesses as it is overhauled valued currency continues to translate into a persistently high inflation rate alongside a high rate of unemployment and poverty that has defied all economic interventions. Despite the rapid economic growth rate of 3.54% recorded in the second quarter of 2022, the Nigerian economy is still gasping for breath as rising rate of inflationary pressures have continued to generate public outcry as the World Bank has only just revealed that Nigeria needs to urgently introduce robust economic reforms that will address mounting fiscal pressures, boost private investment to create jobs, and also come up with policies that will address the poor living standards of Nigerians. And joining me to make sense of all of this and take a critical look at the state of the Nigerian economy at this time and make contending macroeconomic issues is the Chief Executive Officer of the Global Analytics Consulting Limited, Dr. Tope Faswa. He joins us live from our Abuja studios. Doctor, thank you so much for agreeing to speak with us here on Business Nigeria at this time. I wonder what your reading of the Nigerian economy is at this time.
Thank you very much. Of course, it's dire. You know, I mean, you reeled out the figures there. So, I mean, it is what it is. Inflation at 19.6%, you know, unemployment still where it is at over 33%. The Naira, you know, has been in a precipitous fall of late, and we're struggling to recover from that. But on the flip side, we were able to record some growth, 3.5% in the last measured quarter. Maybe we'll be able to sustain that growth into the future. Remains to be seen. But I must say that that's a bit doubtful because the world is already looking at a global recession. The UK economy has dropped by 0.1%. The American economy has dropped in 2 quarters as well, which is described as a technical recession. Most of Europe is going to go into some sort of recession. Germany and co, they're grappling with energy costs and inflation and what have you. There seems to be a global resurgence in inflation, which is akin to what had happened post-World War II and what have you. So as far as Nigeria is concerned, these numbers are not encouraging at all. And, it remains to be seen what government is going to be able to do. I think it's also well, of course, it's largely a result of the unprecedented COVID experience of 2 years ago, which, we're just still trying to recover from. And, the spending of that time, which were inflationary spending, when people were not working, people were not going to work, there was little production. And of course, you know that our economy is still a bit low in terms of production and in terms of value addition to what we produce. So we're still largely an import-dependent economy. And therefore, we also import quite a bit of the inflation from abroad and add to what we have here. So it's kind of compounded. As a matter of fact, perhaps in geometric proportion. Some have argued that the inflation we're reporting is a bit understated, that we should be looking at about 40%, 45%. It depends on how you look at it. But if you look at even just food alone, look at a few food items, you see that some of them have seen very high inflation beyond the 19.6% reported. I mean, but then again, the bottom line is which way forward? What policy choices do we take? I don't agree with usually the prescription of the World Bank, IMF. I think the vice president just came back from the US. He was told the same thing. You guys should go and deal with your multiple exchange rate. Yeah, it's good to say go and deal with your multiple exchange rate. The problem is how? What policy choices do you take in dealing with multiple exchange rate? How did we get here in the first place? But if it's taken as a very simple thing to do, you're likely going to get into serious problem. The easiest way to go and the fastest way perhaps is to, by policy pronouncement, abandon the official rate and say, okay, let everybody go to the open market. But what that is likely going to do is to power up inflation even more perhaps to a triple-digit inflation, have people running helter-skelter, have people losing confidence in the naira, moving into the dollar as they've been doing, but even at a much more precipitous pace. And that could be bedlam. And when that happens, you're going to see business closures, high unemployment, protest on the street, and so on. So, but the easier, the better way, the harder way, which is for me the better way, is to see how you can manage the situation while you're deliberately encouraging productivity, value addition, economic complexity, and sometimes you may have to technically add tariffs on some products that you believe that your people should be able to produce themselves. I believe there's no other way than to go down that route. Of course, honesty in government policies is the key issue, because this is something that everybody knows.
All right.
You know, I mean, it's what a Buhari government had said they would do in time, which hasn't manifested.
All right. Well, Dr. Tokpe, we'll evaluate some of those policies in just a moment, but considering the potentials of Nigeria, the most populous and, of course, the largest country in Africa, we are, of course, endowed with abundant natural resources ranging from crude oil, tin, iron, lead, zinc, limestone. I mean, just to mention but a few. And, of course, we know how the strength of our agricultural sector as well. I wonder when you think we perhaps got it wrong, where and when you think we perhaps got it wrong.
Well, I think what we've seen, I mean, these are historical questions that you've asked, but what we've seen over time is that natural resources don't matter as much. The bottom line is the biggest asset you have is what is in between your brain. Just this morning, or was it yesterday, I made a comment elsewhere that, I mean, some people are pushing the idea that a refinery can only last, the lifetime for a refinery is 35 years. Which is very wrong. I've been to 2 refineries in Houston alone. One of them has been around more than 100 years and so on. So, but the difference is that they produce this thing, they put it together themselves, and therefore they're able to maintain them themselves, in which case a refinery can be there into perpetuity. Therefore, what matters most is the knowledge in putting together a refinery, much more than the crude oil that is in the ground. So I think the lesson we should have learned over time from our economic journey as a country is that much less for the natural resources, limestone and all of that, than for the ability to develop the technology to develop these natural resources and maintain the industries around them. That is where we're missing it. And I keep repeating, Ajaokuta is allegedly 95% complete. It has been 95% complete for decades now. Now, to get the 5% completion done is the problem, it's become an albatross to Nigeria. The Russians aren't coming back anymore. Russia, the USSR went into, I mean, they split up. I understand that maybe it was an Ukrainian company that was very prominent there and all of that, or maybe Ukrainian technology. I mean, so we were stuck. And the Americans and IMF World Bank will not lend you money to go and complete a Russian project. And however, then you now look at them and say, look, well, all the engineers we have in Nigeria, can't we find a way of doing the remaining 5%? Obviously not. We haven't been able to do that. So until we challenge ourselves, and even at the expense of offending some of the bigger countries, we have to understand that, look, this is our life. I mean, some people want to spend a lifetime complaining and complaining. I personally, I'm a doer. I want to see things done. Beyond complaining, I want to offer solutions and say, let's move forward on this. And I believe that we should be able to get our local people and even those in diaspora to come back and say, look, can we take this Ajaokuta 5% to completion? And of course, what's Ajaokuta for is for the iron ore and all of that, which is a lot in that Kogi State axis. That's why the company was sited in that location. And not only that, we have the National Iron Ore Company, dead and buried. We have so many steel rolling mill, Oshogbo, Alaja, all of that, all of them decayed, And in fact, in many of the instances, we're still paying salaries to people who just, sometimes they show up, sometimes they don't in those locations. So I think that that's the lesson we need to have learned. I keep repeating the issue of economic complexity. Nigeria is 127 out of 131 countries are sampled for economic complexity, meaning that we're the fourth worst in the world or thereabout. What that means is that, we're only better than countries like maybe, if you like, Niger, Congo, a couple of other countries in Africa. Even in Africa, a lot of countries like Ghana, Egypt, and Co. are way ahead of Nigeria, which is unfortunate. And of course, we are supposed to be the more, supposed giant of Africa, very smart people, but we seem to be smart only in terms of our own self-aggrandizement and self-promotion. Yes. We need to be smart in terms of collective development. That's what we need to do.
Yes.
And of course, that takes leadership. Yes. To anchor all of that effort. So forget about those natural resources. There are countries in the world, like UAE, for example, only has tourism and sand. And there we spend so much money going to those places to the extent that they've even banned quite a number of our people from coming there. So what are we talking about?
Yes. Really? Well, Dr. Tokwe, we are indeed absolutely pressed for time, but I need to squeeze in maybe a question or two. The first has to do with Nigeria's debt profile. So the Director General of the Debt Management Office, Ms. Patience Oniha, was quoted as saying that the nation's debt profile will continue to rise as long as the nation is not able to generate enough revenue to fund the annual budget. The World Bank has also released a very worrying report, putting Nigeria in 195th position out of 197 countries in terms of debt to gross domestic product growth. I wonder what your thoughts are as we wrap things off, please.
We've been complaining for quite a while about this debt issue, and of course, usually the DMO will say, oh, no worries, as well as the Ministry of Finance. Well, our debt to GDP ratio is still low, we can borrow more. Unfortunately, we of course are using, at the last quarter or thereabout, we used more than 100% of our revenue to service the debt. And when you talk about debt servicing, usually what it conjures is that you're only just taking care of some of the interest. You haven't started paying down the principal. Some of the principals will fall due in a short time, in a couple of years. What do we do when they fall due? Where are we going to get the huge cash flow? Of course, we're going to keep running back to those creditors who say, oh, please roll over because we can't pay now. And that comes with penalties and so on. We only got up to $35 billion as at 2006 when we managed to get a debt write-off of about $18 billion and paid $12 billion to the Paris Club. But now today, Nigeria is doing, on foreign debts alone, we're doing almost $50 billion, which is not good enough, and overall we're doing about $100 billion in terms of total debt. Right. And we keep repeating this thing about revenue, but the point is that it is still within the ambit of the Ministry of Finance to drive revenue, but they need political support. And that's where leadership comes in again. Our president must understand that it is his remit. He has to stand his ground. There are many tax items and tax heads, and including fees, fines, duties, and all of that. We have to go now, Dr. That we have been too slack about, and that's why we're where we are today.
I totally agree with you, perhaps. But Dr. Tokwe, we have to go now. Maybe in 60 seconds or less, you could share with us what your projections are for the last quarter of 2022. What exactly are you seeing play out in the Nigerian economy?
With the budget, you see that, I didn't hear you well, but I think you mentioned the budget. So you look at the MTEF, you see that it's a very sad situation. We are expected to budget about 19 trillion in 2023, and out of that, there's a projection of about 11 to 12 trillion, which is about 60%. As a matter of fact, 63% of the budget is supposed to be deficit. And of course, usually they will compare the deficit with GDP. That's always, we need to be tired of that trick, really, because I think in budgeting, what should matter is the percentage of your deficit to the budget itself. Okay, so it's like, a household should say, we earn 1 million, our expense is 1.2 million, that's a 20% deficit that we have. You don't compare that difference to your total assets, even if the GDP was total asset. But the GDP is the poor representation of the total asset of Nigeria, given if you want to say you want to start selling your asset to fund a single year's budget. If you sell your asset, I always see that again also, this idea of privatization proceeds. It's like you're selling, it's like, a household removing your AC, removing your fan and selling in a flea market just to survive. It's a sign of distress. And so we need to move, like I said before, the bottom line is we need to drive revenue. And driving revenue, it's tough. And we see a scenario where many organizations, including the OPS, organized private sector, they always come up at arms in government, with government, every time government tries to drive some revenue, whether it's excise duty, sugar tax, property tax, what have you, mansion tax. Some of those which had been pushed by Dr. Mrs. Okonjo-Iweala when she was here, they never saw the light of day. But you see, at the end of the day, this country is ours. Those big guys who don't pay, because they're the ones that should pay for the rest to survive, they should understand that without this platform called Nigeria, all of us are gone to the dogs. So I believe that, we should come and rescue our country, and I think it's doable. There's absolutely nothing wrong with this country but us, so driving the revenue. We go abroad, we go to Ghana, we pay, we go everywhere abroad, we go to UK, we pay these taxes, we pay these fees, we pay these fines as we should. But when we come to our country, for some reason, Nigerians have got into their head that, look, we should ride for free in our country, almost for free. However, the guys who have made it must understand that they should invest back and lift up the people who are suffering now so that they may have a country to be proud of and where they can enjoy their money. That is the next call. And I think it's also down to political leadership.
Well, fascinating insights, Dr. Tokwe, especially when you mentioned political leadership with the elections just a few months away. Thank you so much indeed for your time here on Business Nigeria. Dr. Tokwe Fasua, he's an economist and Chief Executive Officer of Global Analytics Consulting Limited. Thank you so much for your views and perspective
Thank you.
on Business Nigeria.
Thank you.